Welcome to this Property and Casualty Insurance Exam Review, powered by Birdsy, your AI study partner. Be sure to like and subscribe for more exam prep, and don't miss what's happening in the lower corner. It could be key to passing your exam. Let's begin.
General insurance concepts. Risk management, indemnity, and insurable interest. What is the primary purpose of indemnity in insurance contracts? Is it A, to restore the insured to their pre-lice financial position? B, to provide a profit to the insured after a loss? C, to guarantee a fixed payout regardless of loss? Or D, to ensure the insurer makes a profit? The answer is A, to restore the insured to their pre-loss financial position. Indemnity ensures that the insured is restored to their financial position prior to the loss, preventing profit from the insurance claim. Which of the following best describes insurable interest? Is it A, a legal requirement for all insurance policies? B, a financial stake in the insured item or person? C, a guarantee of profit from an insurance claim? Or D, a requirement for the insurer to pay claims? The answer is B, a financial stake in the insured item or person. Insurable interest requires the policyholder to have a financial stake in the insured item or person, ensuring they suffer a loss if a claim occurs.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
John owns a house and has an insurance policy on it. If a fire damages the house, what concept ensures he can claim for the repairs? Is it A, insurable interest? B, risk management? C, indemnity? Or D, subrogation? The answer is C, indemnity. Indemnity ensures John can claim for repairs to restore his house to its pre-loss condition without profiting from the insurance. In insurance, why might a policyholder not receive the full amount of their claimed loss? Is it A, the insurer always pays the full amount? B, the loss is not covered by the policy? C, the policyholder has no insurable interest? Or D, deductibles and policy limits apply? The answer is D, deductibles and policy limits apply. Why this question may seem a bit tricky: deductibles, policy limits, and conditions can reduce the payout even if the loss is covered, which might not be immediately obvious. Underwriting, rate-making, and claims basics. What is the primary purpose of underwriting in the insurance industry? Is it A, to sell as many policies as possible? B, to assess risk and set premiums? C, to process claims efficiently? Or D, to provide customer service? The answer is B, to assess risk and set premiums. Underwriting is primarily used to assess risk and determine appropriate premiums for insurance policies, ensuring that the insurer can cover potential claims. An insurance company notices an increase in claims for a specific type of coverage. What is the most likely action the company will take during the next rate-making process? Is it A, decrease premiums to attract more customers? B, keep premiums the same to maintain market share? C, increase premiums to cover higher risk? Or D, eliminate the coverage to avoid losses? The answer is C, increase premiums to cover higher risk. The company will likely increase premiums to account for the higher risk and ensure they can cover future claims. In rate-making, which factor is least likely to directly influence the premium for an individual policyholder? Is it A, the policyholder's claims history? B. The policyholder's credit score. C. The policyholder's location. Or D. The insurer's overall profit margin. The answer is D. The insurer's overall profit margin. Why this question may seem a bit tricky. While individual risk factors are crucial, the insurer's overall profit margin is a broader financial consideration, not specific to individual policyholders. Property Insurance Basics. Covered perils, direct versus indirect loss. What is a direct loss in property insurance? Is it A. Physical damage to property from a covered peril? B. Loss of income due to business interruption? C. Increased living expenses after a covered event? Or D. Damage to a vehicle in an accident? The answer is A. Physical damage to property from a covered peril. A direct loss refers to physical damage to property resulting directly from a covered peril, such as fire or theft. Which of the following is typically considered an indirect loss? Is it A. Fire damage to a building? B. Loss of rental income after a fire? C. Water damage from a burst pipe? Or D. Theft of personal property? The answer is B. Loss of rental income after a fire. Indirect losses are consequential losses that occur as a result of a direct loss, such as loss of rental income. Which peril is typically covered under a standard property insurance policy? Is it A. Nuclear hazard? B. War? C. Fire? Or D. Earthquake? The answer is C. Fire. Fire is a common peril covered under standard property insurance policies, protecting against damage from flames.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
After a storm damages her roof, Maria has to stay in a hotel while repairs are made. What type of loss is her hotel stay considered? Is it A. Direct loss? B. Covered peril? C. Uninsured loss? Or D. Indirect loss? The answer is D. Indirect loss. Maria's hotel stay is an indirect loss, as it is a consequential expense resulting from the direct loss of roof damage. In property insurance, which of the following is not typically considered a covered peril? Is it A. Fire? B. Earthquake? C. Theft? Or D. Hail? The answer is B. Earthquake. Why this question may seem a bit tricky. Earthquake is often mistaken as a covered peril, but it usually requires separate coverage. What is an example of a covered peril in a standard property insurance policy? Is it A. Fire? B. War? C. Wear and tear? Or D. Nuclear hazard? The answer is A. Fire. A covered peril is an event that can cause damage to property and is included in the insurance policy. Fire is a common covered peril in standard policies. After a fire damages his home, John loses rental income from tenants who had to move out. What type of loss is this considered? Is it A. Direct loss? B. Indirect loss? C. Covered peril? Or D. Excluded loss? The answer is B. Indirect loss. Loss of rental income due to property damage is an indirect loss, as it is a consequence of the direct damage caused by the fire. In property insurance, what distinguishes a direct loss from an indirect loss? Is it A. Direct loss is always covered, indirect loss is not? B. Indirect loss involves physical damage, direct loss does not? C. Direct loss is physical damage, indirect loss is financial? Or D. Indirect loss is the cause, direct loss is the effect? The answer is C. Direct loss is physical damage. Indirect loss is financial. Why this question may seem a bit tricky. Direct loss involves physical damage to property, while indirect loss refers to financial consequences. The terms can be confusing because both result from the same peril. Property valuation methods and coinsurance. What is the primary purpose of the coinsurance clause in a property insurance policy? Is it A, to reduce the premium cost for the insured? B, to ensure the property is insured to a specified percentage of its value? C, to provide coverage for all types of property losses? Or D, to allow the insurer to deny claims more easily? The answer is B, to ensure the property is insured to a specified percentage of its value. The coinsurance clause encourages policyholders to insure their property to a certain percentage of its value, typically 80%, to receive full compensation for partial losses. Which valuation method considers the cost to replace property with new property of like kind and quality? Is it A, replacement cost? B, actual cash value? C, market value? Or D, agreed value? The answer is A, replacement cost. Replacement cost valuation covers the cost to replace damaged property with new property of similar kind and quality without depreciation. A homeowner insures their property for $200,000, but the replacement cost is $250,000. If the coinsurance requirement is 80%, how much will the insurer pay for a $50,000 loss? Is it A, $40,000, B, $45,000, C, $50,000, or D, $30,000? The answer is C, $50,000. The homeowner should have insured for at least $200,000, 80% of $250,000. Since they met this requirement, the insurer pays the full $50,000 loss. How does actual cash value differ from replacement cost in property insurance? Is it A, it provides a higher payout than replacement cost? B, it considers depreciation in the valuation? C, it is always the same as market value? Or D, it does not require any coinsurance? The answer is B, it considers depreciation in the valuation. Actual cash value accounts for depreciation, while replacement cost covers the full cost to replace without depreciation. In property insurance, which method might lead to a lower payout due to depreciation? Is it A, replacement cost? B, agreed value? C, market value? Or D, actual cash value? The answer is D, actual cash value. Why this question may seem a bit tricky. The term depreciation might mislead some to think of market value, but actual cash value directly accounts for depreciation. What is the primary purpose of using the replacement cost valuation method in property insurance? Is it A, to account for depreciation in property value? B, to provide funds to replace damaged property with new property? C, to determine the market value of the property? Or D, to calculate the actual cash value of the property? The answer is B, to provide funds to replace damaged property with new property. The replacement cost valuation method aims to reimburse the policyholder for the cost of replacing damaged property with new property of similar kind and quality without considering depreciation. A commercial building is insured for $500,000 with an 80% coinsurance clause. If the building's replacement cost is $700,000, how much will the insurer pay for a $100,000 loss? Is it A, $100,000, B, $80,000, C, $89,286, or D, $70,000? The answer is C, $89,286. The coinsurance requirement is $560,000, 80% of $700,000. Since the building is underinsured, the insurer will pay a proportionate amount. $500,000 divided by $560,000 equals $89,286.
Stuck on a question? Just think of the Birdsy link in the description as your friendly neighborhood superhero, swooping in to save the day with answers. Feel free to explore it now and return to continue. Simply hit pause, and we'll be waiting when you get back.
Casualty and Liability Basics. Types of liability exposures and defenses. What type of liability exposure arises from owning a pet that may cause harm to others? Is it A, personal liability, B, professional liability, C, product liability, or D, employer's liability? The answer is A, personal liability. Owning a pet can lead to personal liability exposure if the pet causes injury or damage to someone else's property. Which type of liability exposure is most relevant for a business that manufactures and sells products? Is it A, personal liability, B, professional liability, C, product liability, or D, employer's liability? The answer is C, product liability. Product liability is crucial for businesses that manufacture or sell products, as it covers damages caused by defective products. What is a common defense against liability claims in negligence cases? Is it A, strict liability, B, contributory negligence, C, vicarious liability, or D, absolute liability? The answer is B, contributory negligence. Contributory negligence is a defense where the defendant argues that the plaintiff's own negligence contributed to the harm. A customer slips on a wet floor in a store and sues for damages. What type of liability exposure does the store face? Is it A, product liability, B, professional liability, C, employer's liability, or D, premises liability? The answer is D, premises liability. The store faces premises liability, which involves injuries occurring on the property due to unsafe conditions. In a liability case, what term describes the legal responsibility of one party for the actions of another? Is it A, vicarious liability, B, direct liability, C, absolute liability, or D, contributory liability? The answer is A, vicarious liability. Why this question may seem a bit tricky. Vicarious liability can be confused with direct liability, but it specifically involves responsibility for another's actions. What type of liability exposure involves being held responsible for damages caused by defective products? Is it A, professional liability, B, product liability, C, premises liability, or D, automobile liability? The answer is B, product liability. Product liability exposure arises when a manufacturer or seller is held responsible for placing a defective product into the hands of a consumer. A homeowner is sued after a tree on their property falls and damages a neighbor's house. What type of liability exposure is this? Is it A, product liability, B, professional liability, C, premises liability, or D, automobile liability? The answer is C, premises liability. This is an example of premises liability, where the homeowner is responsible for maintaining their property to prevent harm to others. In liability cases, what is the term for a defense that argues the plaintiff knew the risks involved and still proceeded? Is it A, contributory negligence, B, comparative negligence, C, strict liability, or D, assumption of risk? The answer is D, assumption of risk. Why this question may seem a bit tricky, the term assumption of risk can be confused with contributory negligence, but it specifically refers to the plaintiff's awareness and acceptance of risk. Negligence, torts, and vicarious liability. What is the primary legal concept that holds an employer responsible for the actions of its employees? Is it A, vicarious liability, B, strict liability, C, contributory negligence, or D, comparative negligence? The answer is A, vicarious liability. Vicarious liability is the legal principle that holds an employer responsible for the actions of its employees when those actions occur in the course of employment. Which term describes a civil wrong that causes harm or loss leading to legal liability? Is it A, negligence, B, tort, C, breach of contract, or D, liability? The answer is B, tort. A tort is a civil wrong that causes harm or loss, resulting in legal liability for the person who commits the tortious act. What is the legal term for failing to exercise the care that a reasonably prudent person would in similar circumstances? Is it A, intentional tort, B, strict liability, C, negligence, or D, vicarious liability? The answer is C, negligence. Negligence is the failure to exercise the care that a reasonably prudent person would exercise in similar circumstances, leading to harm or damage. A delivery driver causes an accident while making deliveries for their employer. Who is likely liable for the damages caused? Is it A, the driver personally, B, the vehicle manufacturer, C, the delivery recipient, or D, the employer? The answer is D, the employer. The employer is likely liable under the principle of vicarious liability as the accident occurred during the course of employment. In a negligence claim, which element is not required to establish liability? Is it A, duty of care, B, intent, C, breach of duty, or D, causation? The answer is B, intent. Why this question may seem a bit tricky, it tests knowledge of negligence elements. Intent is not required. Negligence is about failing to exercise reasonable care, not intent. What is the legal term for a situation where one party is held liable for the actions of another party, such as an employer for an employee? Is it A, negligence, B, vicarious liability, C, strict liability, or D, contributory negligence? The answer is B, vicarious liability. Vicarious liability is the legal principle where one party is held responsible for the actions of another, typically in employer-employee relationships. A store owner hires a contractor to repair the roof. The contractor's negligence causes an injury to a passerby. Who is primarily liable for the injury? Is it A, the store owner, B, the passerby, C, the contractor, or D, both the store owner and the contractor? The answer is C, the contractor. Contractors are typically independent entities, so they are primarily liable for their own negligence unless the hiring party retains control over the work. Policy provisions and contract law. Declarations, insuring agreements, conditions, exclusions. What is typically included in the declaration section of an insurance policy? Is it A, policyholder's name and coverage limits, B, exclusions and conditions, C, insuring agreements, or D, claims procedures? The answer is A, policyholder's name and coverage limits. The declarations section includes basic information such as the policyholder's name, the policy period, and the coverage limits. Which section of an insurance policy outlines what is covered by the insurer? Is it A, declarations, B, exclusions, C, insuring agreement, or D, conditions? The answer is C, insuring agreement. The insuring agreement specifies the coverage provided by the insurer, detailing what risks are covered. What is the primary purpose of the exclusions section in an insurance policy? Is it A, to list the policyholder's responsibilities, B, to specify what is not covered, C, to provide coverage limits, or D, to describe the claims process? The answer is B, to specify what is not covered. Exclusions specify what is not covered by the policy, helping to define the scope of coverage. A homeowner's policy states that damage from earthquakes is not covered. What section of the policy would this information be found in? Is it A, declarations, B, insuring agreement, C, conditions, or D, exclusions? The answer is D, exclusions. Exclusions detail what is not covered by the policy, such as specific perils like earthquakes. In an insurance policy, which section might mistakenly be assumed to include all covered perils? Is it A, insuring agreement, B, declarations, C, exclusions, or D, conditions? The answer is A, insuring agreement. Why this question may seem a bit tricky. The insuring agreement lists covered perils, but exclusions can limit coverage, so not all perils are covered. In an insurance policy, which section might be misunderstood to include all possible risks covered by the policy? Is it A, declarations, B, conditions, C, insuring agreement, or D, exclusions? The answer is C, insuring agreement. Why this question may seem a bit tricky. The insuring agreement outlines what is covered, but it does not list every possible risk. Exclusions and conditions further define the scope of coverage. Contract elements and legal requirements. Which of the following is a necessary element for a contract to be legally binding? Is it A, consideration, B, warranty, C, endorsement, or D, rider? The answer is A, consideration. A legally binding contract requires an offer, acceptance, consideration, capacity, and legality. Without any of these elements, the contract may not be enforceable. What is the primary purpose of the insuring agreement in an insurance policy? Is it A, to list policy exclusions, B, to define the coverage provided, C, to detail the premium payment schedule, or D, to outline the claims process? The answer is B, to define the coverage provided. The insuring agreement outlines the insurer's promise to pay for covered losses, defining the scope of coverage provided. John signs a contract with an insurance company, but later discovers he was under the influence of medication, affecting his judgment. Can this contract be voided? Is it A, no, contracts are always binding once signed, B, yes, all contracts can be voided within 30 days, C, yes, if he lacked capacity to understand the contract, or D, no, unless fraud was involved? The answer is C, yes, if he lacked capacity to understand the contract. Contracts require parties to have the capacity to understand the terms. If John lacked capacity due to medication, the contract might be voidable. Which of the following is not a requirement for a valid insurance contract? Is it A, offer and acceptance, B, consideration, C, legal purpose, or D, beneficiary designation? The answer is D, Beneficiary designation. A valid insurance contract requires offer, acceptance, consideration, capacity, and legality. A beneficiary designation is not a requirement for contract validity. In contract law, what does the term capacity refer to? Is it A, the physical ability to perform tasks? B, the mental ability to understand complex ideas? C, the financial ability to fulfill contract terms? Or D, the legal ability to enter into a contract? The answer is D, the legal ability to enter into a contract. Why this question may seem a bit tricky. Capacity refers to the legal ability to enter into a contract, not the physical or mental ability to perform tasks. Types of property and casualty policies. Homeowners and dwelling policies. What is the primary difference between a homeowner's policy and a dwelling policy? Is it A, homeowners policies only cover personal property? B, dwelling policies primarily cover the structure itself? C, dwelling policies include liability coverage? Or D, homeowners policies do not cover additional living expenses? The answer is B, dwelling policies primarily cover the structure itself. Homeowners policies typically cover both the structure and personal property, while dwelling policies primarily cover the structure itself. Which coverage is typically included in a standard homeowner's insurance policy? Is it A, liability coverage? B, flood insurance? C, earthquake coverage? Or D, auto insurance? The answer is A, liability coverage. A standard homeowner's insurance policy usually includes dwelling, personal property, liability, and additional living expenses coverage. What type of property is covered under Coverage B of a homeowner's policy? Is it A, the main dwelling? B, personal property? C, other structures? Or D, additional living expenses? The answer is C, other structures. Coverage B of a homeowner's policy covers other structures on the property, such as detached garages and sheds. John's home is damaged by a fire. Which part of his homeowner's policy will cover the cost of temporary housing? Is it A, coverage A? B, coverage B? C, coverage C? Or D, coverage D? The answer is D, coverage D. Coverage D, or loss of use, covers additional living expenses if a home is uninhabitable due to a covered loss. Which of the following is not typically covered under a standard homeowner's insurance policy? Is it A, fire damage? B, earthquake damage? C, theft of personal property? Or D, windstorm damage? The answer is B, earthquake damage. Why this question may seem a bit tricky. Earthquake damage is often mistakenly thought to be covered, but it usually requires a separate policy. Personal auto policies. What is the primary purpose of liability coverage in a personal auto policy? Is it A, to cover damages the insured causes to others? B, to cover damages to the insured's own vehicle? C, to provide medical payments for the insured? Or D, to cover rental car expenses? The answer is A, to cover damages the insured causes to others. Liability coverage in a personal auto policy is designed to protect the insured against claims for bodily injury and property damage they may cause to others in an accident. Which part of a personal auto policy covers theft of the insured vehicle? Is it A, liability coverage? B, comprehensive coverage? C, collision coverage? Or D, uninsured motorist coverage? The answer is B, comprehensive coverage. Comprehensive coverage in a personal auto policy covers theft as well as other non-collision related damages like fire or vandalism. What does uninsured motorist coverage protect against? Is it A, damage to the insured's vehicle from a collision, B, theft of the insured's vehicle, C, accidents with uninsured drivers, or D, rental car expenses? The answer is C, accidents with uninsured drivers. Uninsured motorist coverage protects the insured if they are involved in an accident with a driver who does not have insurance. John's car is damaged by a falling tree branch during a storm. Which part of his personal auto policy would cover this damage? Is it A, liability coverage, B, collision coverage, C, uninsured motorist coverage, or D, comprehensive coverage? The answer is D, comprehensive coverage. Comprehensive coverage in a personal auto policy covers damages from non-collision events like falling objects, fire, or theft. Which coverage would apply if an insured driver hits a deer while driving? Is it A, collision coverage, B, comprehensive coverage, C, liability coverage, or D, uninsured motorist coverage? The answer is B, comprehensive coverage. Why this question may seem a bit tricky, hitting an animal is not considered a collision. Comprehensive coverage applies to animal-related incidents, not collision coverage. Commercial package, liability, and workers' comp policies. What is the primary purpose of a commercial package policy? Is it A, to offer personal liability coverage, B, to combine multiple coverages into one policy, C, to provide health insurance for employees, or D, to insure against natural disasters only? The answer is B, to combine multiple coverages into one policy. A CPP is designed to provide a flexible insurance solution by combining multiple coverages into one policy, tailored to the needs of a business. Which of the following is typically included in a commercial general liability policy? Is it A, bodily injury liability, B, professional liability, C, automobile liability, or D, workers' compensation? The answer is A, bodily injury liability. A CGL policy generally covers bodily injury and property damage liability, which are common risks for businesses. What type of policy is designed to cover an employer's legal obligations for employee injuries? Is it A, commercial auto policy, B, commercial property policy, C, general liability policy, or D, workers' compensation policy? The answer is D, workers' compensation policy. Workers' compensation insurance covers an employer's legal obligations for employee injuries or illnesses that occur as a result of their job. A business owner wants to protect against potential lawsuits from customers slipping on their premises. Which type of insurance should they consider? Is it A, workers' compensation insurance, B, commercial auto insurance, C, commercial general liability insurance, or D, professional liability insurance? The answer is C, commercial general liability insurance. A commercial general liability policy covers bodily injury claims, such as those from customers slipping and falling on business premises. Which policy would typically not be included in a commercial package policy? Is it A, commercial property insurance, B, professional liability insurance, C, commercial general liability insurance, or D, business interruption insurance? The answer is B, professional liability insurance. Why this question may seem a bit tricky, professional liability is often confused with general liability, but it is usually not included in a CPP and requires a separate policy.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
State and federal regulations. Insurance regulation and licensing requirements. What is the primary purpose of state insurance departments? Is it A, to regulate the insurance industry and protect consumers? B, to set federal insurance standards? C, to provide insurance to state employees? Or D, to manage state-funded insurance programs? The answer is A, to regulate the insurance industry and protect consumers. State insurance departments are responsible for regulating the insurance industry to protect consumers and ensure the financial stability of insurance companies. Which entity is responsible for licensing insurance agents? Is it A, the National Association of Insurance Commissioners? B, state insurance departments? C, the Federal Insurance Office? Or D, the Department of Labor? The answer is B, state insurance departments. State insurance departments are responsible for licensing insurance agents to ensure they meet the necessary qualifications and standards. An insurance agent in Texas wants to sell policies in California. What must they do to legally sell insurance in California? Is it A, apply for a federal insurance license? B, transfer their Texas license to California? C, obtain a non-resident license in California? Or D, register with the National Insurance Registry? The answer is C, obtain a non-resident license in California. The agent must obtain a non-resident license in California to legally sell insurance there, ensuring compliance with state regulations. What is required for an insurance company to operate in a particular state? Is it A, a federal insurance license? B, a state business license? C, approval from the NAIC? Or D, a certificate of authority from the state? The answer is D, a certificate of authority from the state. Insurance companies must obtain a certificate of authority from the state to ensure they meet financial and regulatory standards. Which of the following is not typically regulated by state insurance departments? Is it A, insurance policy forms? B, federal insurance programs? C, insurance rates? Or D, agent licensing? The answer is B, federal insurance programs. Why this question may seem a bit tricky. State insurance departments regulate many aspects, but they do not typically regulate federal insurance programs, which are managed at the federal level. Which of the following is a requirement for an insurance agent to maintain their license in most states? Is it A, passing a new licensing exam annually? B, submitting a new application every year? C, completing continuing education credits? Or D, paying a renewal fee every 5 years? The answer is C, completing continuing education credits. Why this question may seem a bit tricky, the requirement for continuing education is often overlooked, but it is essential for maintaining an active license in most states. Unfair trade practices and consumer protections. What is the primary purpose of the Federal Trade Commission in relation to consumer protection? Is it A, to prevent unfair or deceptive trade practices? B, to regulate interstate commerce? C, to enforce state-level consumer protection laws? Or D, to manage consumer complaints? The answer is A, to prevent unfair or deceptive trade practices. The FTC's main role is to prevent unfair or deceptive trade practices, ensuring consumers are protected from misleading business activities. Which of the following is considered an unfair trade practice under state insurance regulations? Is it A, offering discounts for bundled policies. B. Misrepresenting policy terms. C. Providing clear and accurate policy information. Or D. Charging premiums based on risk assessment. The answer is B. Misrepresenting policy terms. Misrepresentation of policy terms is an unfair trade practice as it can mislead consumers about their coverage. A consumer purchases an insurance policy based on an agent's promise of benefits not included in the policy. What consumer protection issue does this scenario illustrate? Is it A. Unfair discrimination, B. Rebating, C. Misrepresentation, or D. Coercion? The answer is C. Misrepresentation. This scenario illustrates misrepresentation, where the agent falsely promises benefits, misleading the consumer. Under federal regulations, which of the following is not considered a deceptive practice? Is it A. False advertising, B. Bait and switch, C. Hidden fees, or D. Offering a warranty? The answer is D. Offering a warranty. Why this question may seem a bit tricky. All options may seem deceptive, but only offering a warranty is not inherently deceptive unless misrepresented. What is the role of state insurance departments in consumer protection? Is it A. To set federal insurance standards, B. To provide insurance policies, C. To enforce regulations against unfair practices, or D. To manage insurance company profits? The answer is C. To enforce regulations against unfair practices. State insurance departments enforce regulations to protect consumers from unfair practices by insurers and agents. Which federal agency is primarily responsible for enforcing laws against deceptive advertising practices? Is it A. Consumer Financial Protection Bureau, B. Federal Trade Commission, C. Securities and Exchange Commission, or D. Federal Communications Commission? The answer is B. Federal Trade Commission. Why this question may seem a bit tricky. The Federal Trade Commission is often confused with other agencies like the Consumer Financial Protection Bureau, but the FTC specifically targets deceptive advertising practices.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.